So you've all heard the stat, 90% of traders fail, but no one actually ever tells you why. It's not your strategy, it's not your broker, it's not even the market. The truth is, most traders fail because they don't even realize the game that they're playing. It's not a game of charts and profit and loss, it's a game of psychology. My name's Brandon. In this video, I'm going to break down the real reasons why traders fail and how to fix it. Because once you understand this side of trading, everything else starts to click. Every trader starts out thinking that they can control the market. You can't. You can only control two things, and that's your risk and your reaction. The moment you start feeling that you can predict the market and exactly what price will do, that is when you'll start to force trades and overtrade. So you start chasing entries, ignore stop losses, or jump on too early just because it feels right. That is the illusion of control. In 2022, there's a study done where it found that traders who use terms such as, I knew it was going to go up, I knew it was going to go down, it hunted my stop loss, or I just had a feeling, actually had a 35% more chance of losing because they aren't following a fixed system, they're following their ego. So it's not the market that's beating them, it's their psychology. Think about this, the best hedge funds in the world only have a 60% win rate. So they accept uncertainty and they manage probabilities. Whereas most day traders try to outsmart the market, whereas the professionals try to survive the market. So this is the part that most traders never really get past, and that is controlling their emotions. So there was a study done by the University of Cambridge, which tracked brain activity in a group of day traders. And it found that when a trader took a loss, it lit up the same part of the brain as when you feel physical pain. So that's why you overreact when you take a loss, because your brain literally feels like it's being physically attacked. But when you win a trade, your brain floods with dopamine. So you feel invincible, you feel unstoppable. And when you lose a trade, your brain feels pain. And they're both reasons why when you win or lose, you try and get back into the markets. And that's not trading anymore, that's just pure gambling. And the crazy part is as well that some traders actually get a rush and a dopamine hit from the losing trades. And that is the exact same as what gamblers get while they're at the casino. That's what casinos rely on to make money. And prop firm data showed that the average trader fails their accounts within 30 to 40 days, not because their strategy was wrong or incorrect, but because they couldn't control their emotions. And their discipline just collapses after a few wins and a few losses. So you end up confusing excitement with progress, and you start feeling like you need the rush more than the actual reward itself. This one's simple but brutal. Most traders fail because they're treating it like a hobby and not a profession. When you look at full-time day traders or even FTMO top performers, the difference isn't their entries or their lot sizes or their setups, but it's the consistency and the discipline that they have. Because they most likely trade at the exact same time, use the same setups, and log every single trade. So FTMO in 2023 also did a study, and it showed traders with a defined daily routine had 48% higher success rates than those who just hopped on randomly. But most retail traders, they trade when they're free. They check the charts on their phone, maybe in their lunch break or in a half hour or hour time that they have free throughout the day. And then they just end up opening random positions, hoping that it might go up or down. Again, that's gambling, and there's no consistency and there's no discipline. And because there is none of that, how do you expect to make professional results without acting like a professional? And yeah, consistency isn't fun, it's boring, it's repetitive, and it's structured, but it's consistency which pays. All right, so if all those sound like problems that you're having with your own trading, this is how you're going to fix it. Step one, accept uncertainty. The market isn't out to get you, it's just noise and probability. Once you accept that you can't predict the market, you will stop overreacting to it. Step 2, create a pre-trade routine. This can be as simple as checking your key levels just before you start trading, checking the news for the day, and writing down your daily bias. This conditions your brain to act logically and not emotionally. So step 3 is track more than just your results. Journal your emotions: when you felt bored, when you felt tired, when you felt greedy. And over time, you'll see patterns where these emotions correlate to losing days within your trading. Once you can rectify this, you'll start to see much better days and much lower losing days. Step 4, risk less than you actually think you should. When you risk less, your emotions naturally will calm down. It's easier to follow your trading plan when each trade isn't tied to certain emotions. And finally, step 5, make it boring. Trading should feel calm. When it's boring, it means that your process is working. Remember, the goal isn't to be right, it's just to be consistent. And if you can learn to start treating trading like a business instead of a hobby, you'll already be ahead of 90% of the other traders out there. So that's it. Most traders fail not because the market is impossible to crack, but because they're never going to fix what's in between their ears. You can copy someone else's strategy, but you can never ever copy their emotions. And if you're serious about trading full time, focus 80% on your psychology and your emotions, and then the other 20% on the strategies. That's where most traders fail, because they spend 80% of the time looking at completely different strategies and not improving on their emotions and their psychology. So if you enjoyed the video and you found it helpful, please feel free to like and subscribe. I will also put a link down below to the live account that I use, and also to FTMO, who are the prop firm that I use. And if you want to get one of their accounts, feel free to click the link below, and I'll see you in the next video.